Hey traders, Raghi here, and I'm going to show you a little something different here. I think we've been spending a lot of time on exhaustion setups, and we have a bullish bias right now. So those V-score lows and those exhaustion lows and the HPMR lows, those continue to be places that we want to focus our attention on. But the other question that I get a lot of is, okay, Rag, how can we understand if the markets could potentially be continuing to the upside? How can we better get a grip on movement to the upside if we break through certain resistance levels? So I'm going to clean this chart up a little bit here and just show you some of the things that I do on other screens to better do that. And look, in a situation of trying to understand market trends, grab candles and the 34 EMA wave, they are designed to distinguish between whether a market is trending or chopping, whether it's in the process of losing its potential trend by plotting more neutral grab candles, or whether it's trying to accelerate by the consistency of the green or the red. I mean, it's a completely different way of looking at the market. Now, here I'm sharing John's 10x candles, because so much of what I talk to you all about is time, volatility, and volume, right? Time, volatility, and volume. So you know that V-score is definitely all about understanding volatility. We talk about the extremes, and of course, volume, right? Now we know that our time can be measured by our clearing range tool. So here I have a very typical setup for us, but rather than bring in the and I'm gonna streamline this chart up even a little bit more. Okay, actually no, I'll leave it the way it is. So another way of looking at certain levels. Okay, let's differentiate the levels we're talking about, because this will be terminology we talk about a lot. Everyone can agree this is the top of the range, this is the bottom of the range. So says what? So says the 30-minute clearing range. Top of the range, bottom of the range, right? At the bottom of the range, especially if we've got our HPMRs, especially if we have our V-scores bottoming out, this is what I would call exhaustion, right? The market's heading down to a support level. I want to buy it because I'm at support and I have bullish bias. Now, the market doesn't always give us this opportunity. Today was terrific. Today was great. I talked about this in the close, and we even touched on this in the free video. But what we're going to transition to is talking about, well, what happens if we take out the clearing range? How can I better confirm that the markets might continue to go up? Or let's make this complementary. The markets pull back, give me my V-score at HPMR buy, and then we get to this clearing range high where there's a big question mark. Can we continue higher? Grab candles can measure trend, but their job is not to measure momentum. We can talk about the propulsion dots, meaning my red 3-8 propulsion dots as an early insight, but we don't always get those. We can talk about the continuation of the 821 or the 813 propulsion dot, but again, we don't always get those. So when we get to a point like we did here, it's the clearing range high, and the question becomes, could we move higher through that level? Now, what's so important is we do not ditch our bullish bias. I still have a bias that tells me I'm looking for the market to move higher. We do not ditch that. I'm still not, well, we could be long, we could be short. No, no, no. This is still very much the commitment to the long side. We're in an asset bubble. So what I'm looking at right now, and this is John's creation of the 10X. And a lot of folks ask me, Rag, you have color-coded candles. Do you use the 10X? Indicator sets of indicators that you may own. And you know what their job is. You know what they're designed to decode. Once you realize you've got bullish bias, well, green grab candles are like, well, whatever. Right? We're going to buy no matter what. Green, red, blue, it doesn't matter. The question then becomes, if I bought down in here and I want to see if the market can continue through here, Is there a tool that will give me insight into that move? Well, sure, we can look at V-score. We can look at the V-score having moved up off the exhaustion level and maybe crossing the mean, giving us some insight into key levels that are important, but they're still not going to necessarily tell me what to do right here. Okay? Notice there's a lonely little blue dot right there. That is a conviction dot. That's part of the approach that John uses with 10x bars. Okay? We have green grab candles. We have green 10x candles. And I think I could probably, what I'll do tomorrow when I'm in the chat room with you all, is I'll lay this layout next to my exhaustive, my market trend analyzing grab candle layout. That's a really cool juxtaposition because, again, indicator sets. On one hand, I'm looking to see what happens at exhaustion. That is not what I'm going to consult 10x and conviction dots for. I don't want to be a short seller. Okay? I'm my bullish bias. But if I have bullishness and if I have conviction dots at a specific or near a specific point where I want to see the market continue, take a look. It's exactly what we had. All right, so I know a lot of you are saying, okay, Rog, well, what did, for example, the grab candles look like at that point? And that's a great question. So let's go ahead and do that. So I'm going to keep the volume strength tool on, but I'm going to undo the 10x. There you go. So do you notice how the grab candles were saying, yeah, we're ready to go. We're bullish. The organization is there via the way in which price action is responding or trading above the 34 EMA high close low. But notice as we get to this point, that little dot pops up and tells me we're getting above average volume. We're getting a volume move at a key point. What's the key point? Well, we're getting our long trade triggering with the clearing range breach. Do you think that helps with confirming a potential move to the upside? Well, let's use another example. Let's jump on over to the NAS. This one isn't quite as easy. All right, so let's start off with, well, we're looking at the grab candles right now. Am I bullish? Yeah, I mean, the grab candles are up. I've got bullish bias. We just got out of the HPMR. That's my exhaustive setup. My V-score was bottoming out. I mean, a lot of you saw what happened this morning via the tools we always take a look at. But as we were, and there's two things that happened on the NAS. Bullish bias. So anything that indicates weakness, I'll say, yeah, I know what happens when the market looks like it wants to break down. The bulls wake up. So I'm not going to be bamboozled by the downside. I'm going to look for HPMR, look for V-score. Look at those 3-8 dots right there. The 3 crossed the 8, it interacted with price. That's a really good look at the market showing me potential, well, in this case, I won't call it conviction. I'll call it acceleration, propulsion. We call them propulsion dots for a reason. We breach, well, there's no handy-dandy little conviction dot this time, is there? But shortly after, there it is. Shortly after, there it is. Shortly after, there. It's not just the dot. It's not just the propulsion. When you're momentum trading, when I'm momentum trading, I'm looking for a certain threshold to be broken. And I'm looking for proof that there is enough oomph, that there's enough interest, volume, conviction, propulsion to say that we can continue past that level. And that's what this did. Again, if I had a bullish and bearish, if I was open to either side of the market, I think today would have shaped out very differently. I mean, look at all the, now you might say, well, Rog, this was kind of neat. You know, we're up in the, we're heading down, 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 all sorts of conviction dots, and then we end up down in here. Like, that's a different kind of that's a different kind of trading. That's a kind of trading where you're open to two sides of the market, and I find that far, far more difficult. I've been trading for 30 plus years, and I'm telling you, I find that far, far more difficult. What I find easier is having conviction, having a direction in which I want to focus on only. Now, I spent a good part of the midday update today talking about why I have this kind of conviction, to the upside. And this was the 2020 mid-year outlook. Come June, gang, at the end of the quarter, at the end of the month of June, I reassess everything. I try to start with a blank slate. I try to take observation of everything that's happened up until the middle of the year. So that's why the middle of the day, the session that we had, and I sent out these notes to everybody to explain that, sure, we could talk about the macro stage that the market is in. I get that question a lot. And sure, we could talk about what the Federal Reserve is buying and what they're willing to do. And when I measure all that, here's the bottom line. Even we could talk about the Fed's own GDP-based recession indicator, which is actually getting towards levels that would suggest we are, and I think we are, in a recession. But at the other end of the spectrum is the economy and the stock market are not one and the same. And the Federal Reserve is supporting the stock market. There's nothing they can do for the economy. There's nothing they can do to get inflation moving higher. They've tried. Inflation peaked in 2018 in August. They can't get the economy moving, right? Because normally what happens, and if you read this economic cycle blurb that I shared with you all, the Fed raises rates, the economy starts to cool, the Fed cuts rates, the economy starts to heat up. The economy starts to heat up, Fed cuts rate, right, to cool it off, and on we go. And probably through most of the Alan Greenspan years, we had this sort of interest rate driven economy. Then '08 happened. The interest rate economy showed its flaws, greed and easy credit being one of them. And then all of a sudden we went to a quantitative easing economy where Ben Bernanke, the mad scientist, proved that we can actually take on these debts, take on these toxic assets and monetize the debt. Great Scott. We could actually do that. It changed the paradigm. And now we have sort of a hybrid of this Frankenstein quantitative easing plus this easy credit in order to keep this market propped up. But it's not affecting any positive change on GDP, and it's not able to get inflation to move higher. So the Federal Reserve is doing the only thing they can do, propping up the economy with printing money, and now they're buying ETFs via the Treasury. All right, so I'm trying to put that out there in as sort of non-biased, non-emotional way possible. I have a lot of feelings about what's going on. And like every other bubble that preceded it, this one's going to end badly too. I don't know why anyone would think that this bubble is any different than any other bubble. It doesn't have to burst in an '08 style, but at some point the party does end. I just don't know when. So I will quit guessing at it. I will quit juxtaposing the macroeconomic nightmarish scenario that we're in and just say, look, this is what the markets are thinking. A lot of folks ask me what's going to wake the market up. Gang, my guess is as good as anybody else's. But having been in the market for as long as I have, I'll tell you it's two things. It's going to be the election cycle is complete and insolvencies. And I'll tell you what, they're probably going to happen chronologically pretty in a similar time. I don't know which one happens first, but when we look at the timeline of everything, it's going to be interesting to see the election is over. The Federal Reserve is going to keep trying to do what they're doing, but the insolvencies are going to hit. So that's how I think if a dose of reality is going to come. The timing and the catalyst is going to be that. In the meanwhile, let's go back on over to this chart. What did I point out from a momentum standpoint? I could turn let's turn the 10X candles back on here. And I hope this is interesting. And feel free to reach out to me, Raghee, Raghee, at simplertrading.com and tell me what you think. We're going to spend a lot more time talking about this. All right. But the flip side of what I've been teaching you guys throughout June is, well, we get how to buy exhaustion, Rog. You've taught us. We have videos on it. Now, what about momentum? The 10X candles and grab candles are not at odds with each other. You'll notice they're pretty darn complementary, aren't they? So what we're doing is we're using tools that we're already familiar with. The clearing range, getting close to a level that we would anticipate would need some help to get through. Help comes way of the 3-8 cross, and then help comes by way of our conviction dots. And if you take a look at what's happening overall, the green 10X is saying, yeah, we want to be a buyer. Guess what? Grab candles agreed too. So when the grab candles and the 10X are pointing in the same direction as we're going up through a level that could be a ceiling, the 3-8 crosses, giving us 2 red propulsion dots, and then we get conviction dots right around the area of our clearing range breach, yeah, I'm interested in more upside. I think that we could see some movement to the upside, which we did. And then when we pull back and the 10X says, yeah, we've lost some of that bullishness, right? There's our yellow candles. But what do? Well, we could ask ourselves, are we coming back into the clearing range? Are we coming back to a VWAP? What now? Let's toggle this one more time. What are the grab candles telling us? What is the wave telling us? Right? So let's go and edit the 10X. And this might seem kind of dizzying at first, gang. And you might say, well, Rog, what if I don't have 10X? Don't worry about it. These are tools that I'm going to show you in the chat room. Watch them work. Watch me let me trade with you live using this kind of approach for a couple weeks. And then you can decide whether or not this is something you want to do and want to focus on. So what happens here? We're starting to get into a little bit of weakness. 10X said we lost some momentum. So did the grab candles. We went from green to blue to red. And we're trading back into the range that is the clearing. We are still well above the bottom of the range. So this is still a buyable zone for me, right? And then if I go ahead and let's do this. If I go ahead, so I'm looking at this particular layout on the NQ. Let's go to the NQ here. And this is at, right here at 10 minutes after 11. All right, here's about 10 minutes after 11 right in here. All right. What am I trading down into? HPMR. What do I have proximity to? And what am I still above? The VWAP. Do I have the ability to buy a pullback here? Do I have the ability to buy inside the clearing range? Yeah, I mean, this is pretty aggressive. This would be a retest zone. It's not that better zone of the retracement way down in here. But remember, I'm bullish or nothing because we're still above the clearing range high. So again, the bullish bias absolutely gave us the clarity to continue on with the path of being a buyer. And I'm just showing you different ways. Now, would I look at 10X and conviction dots as the market is selling off and I want to be a buyer? No. I would switch over to the V-score. I would switch over to HPMRs. I would switch over to grab and wave. But as I'm coming up towards a resistance level or support level, but in this case resistance because I want to be a buyer, as I'm coming up to those resistance levels, I can then ask myself, all right, what's the 3-8 propulsion dot doing? What's the conviction dot? And what's the 10X communicating about the market? So when I talk about indicator sets, which is something that a lot of you seem very interested in when I discussed it a couple weeks back. In other words, what is it that we want to look at a specific time or for a specific setup? So I can turn on the 10X, turn off the grab, right, for momentum. And then I could turn on the grab and turn off the 10X, right, for exhaustion. There's two different approaches. Another thing you could do here as the markets are pulling back in exhaustion is that V-score, right? V-score, HPMR combos are fantastic. So now I've kind of laid, and I know this video ran a little long, but now I've laid out a plan of attack where you've got a momentum. Remember, conviction measures volume. 10X measures what contributes that conviction dot. V-score measures volume. Our bullish bias helps us out. Grab measures the market trend. So there's a lot of cool things we could put to work, and I'm going to do it with you guys live. So I figured we'd have a nice primer for both these indicator sets here on the premium video, and I'll see you tomorrow in the chat room, and we'll discuss all of this and then some together in the live market, which is really the proving ground, right? So I hope this helps. If you have any questions, feel free to reach out to me, Raghee, Raghi, at simplertrading.com. I'll see you in the next update.